Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, October the 11th, 2023. The market's been really interesting, not as easy to trade, but it definitely has been very interesting as we see positions change, money move in, money move out of the market, where they're putting it, how they're doing it. It's been incredible. I realize that all of our trading is done algorithmically. It's quantitative trading inside and out now. Even if you're sitting at your computer and you're trading, it is running through quantitatively to the computers for either the NASDAQ or the Merck or wherever your order is being routed. Now, I'm going to start here on the hourly chart. I continue to count a minor second wave. And a lot of people, just because we get these big up days in and we get this powering, it appears to powering up in stocks like NVIDIA and Microsoft and Meta. And so people start really falling for one of the characteristics and personalities that a wave two can have. Wave twos characteristically, are notorious for being deceptive, deceiving, phony plays, et cetera, where they will give this feeling to the market that we're in a reversal. And that pretty much is the way it's been since we reached that low at 42.35. And that would have been back on October the 4th. So here we are, October the 11th. And we're cruising, basically working our way to be over 100 points higher than where we started. Now, that won't happen until 44.35. But to see how it all is getting done, for example, we had the PPI number this morning. They didn't like it. And although it wasn't like this mad dash hard push, but it was hard enough to bring it down. But then they bought it up. Then we get the Fed minutes, and they decide, well, that's not really something that we like either, because it was very indecisive in terms of being clear. Are you going to raise? Are you going to pause? Are you going to do whatever? Even though the Fed has consistently said that they're concerned for inflation, they're concerned on their fight for inflation, they're concerned with the wage inflation. They have a lot of concerns, and they're not really sure of what they need to do next, but they're leaving open and the high prospect that rates will get hiked one more time. And that's likely happening at the end of the month. So you begin to wonder, like, okay, guys, why are we propelling it higher? Well, we've had calls for that the market was extremely oversold. Okay. What is it now? Working on being extremely overbought. So what do we do now? They will never shout overbought, overbought, overbought. They just don't do that. That does not sell airtime. Or they're really now getting prepared because, okay, we've got all this all out of the way. The bonds are putting in a really solid rally. So what do you think? Okay, let's go focus on earnings. And the banks start by coming out this Friday. They start the whole bandwagon. And Morgan Stanley's already gotten a little bit of bad press. So it's like, are they really going to be as good as they thought? Why are they stepping in now? And again, I think it's just a lot of things that either the market is now out there believing, okay, if we get one more hike, that'll be it. And then we'll start going into, actually for interest rates, I think we might go into a counter trend rally in bond price and decline in the yields. But that one's going to take a while to truly unfold. So using that now versus that is the market now preparing for its earnings. We see the same, I don't want to use the word manipulation, but it just seems that they push and they move in size into NVIDIA, Microsoft, Meta, Google, Amazon, AMD, Apple. AMD was actually down today. But, Amazon, what they're having their Amazon Prime week, right? Where we got all these great prices. So, and what do they do that for? To have this great end of year. Well, we're going to do so much sales. So it's hype after hype after hype, but it fits the characteristics of a second wave. This is exactly what second waves are all about. Now, the wave pattern remains consistent, where we have A, B, and now we're looking for a 5-wave C, 1, 2, 3, and then we did a 4. Look at how beautiful that 4 is, A, B, C. And it actually did come down, I believe, to 43.74 was the support level, came down to 77.25. So it pretty much came right back down into support. And it fits. And what does it do? Launch up out of that, which is what you would expect as that 5th wave picks up. Same thing it did here. This was wave 5 of 3. This is, I'm not sure exactly where it's going to fit in, but it's in minuet wave 5. So I hook up the fibs. So we continue to have just the C wave at 44.20. Well, did you see what they really did? They started like storming in after the bell and pushed it up close. First of all, 44.17, which is a resistance level. That is a 50% for the wave 2. Then we have 2.618, which is a 44.20, which is for wave C. And now I've added wave 5. So wave 5 just begins at 44.50. So we still have that resistance at 44.20. And, you got to give it up to like 21.20 to 25-ish. So into that zone. Could that complete it? Yeah, it could. I mean, we now have moved higher than wave 3. So that's been completed. But wave 5 is not, by any means, I don't think wave 5 is over yet. Wave 5 of wave C of minor 2. So we still have some upside. Let's look at the fibs. The most common, and I'm measuring wave 5 to wave 1, is equality. Wave 1 was pretty dynamic. That was last Friday. So here we're coming into this Friday. Now, tomorrow we have CPI. I believe we got some other, we've got initial jobless claims. We've got CPI, and let's see what else we got coming out. Oh, this is interesting. Being that I am a retiree, Social Security Administration is releasing annual cost of living adjustments. So we find out what kind of raise we're going to get, if any, from Social Security. That's interesting. But anyway, we have initial jobless claims, consumer price index, and Boston Fed President Collins will be speaking in the afternoon at the bell. So they start speaking at the bell at 4 p.m. So, but at 8:30 a.m., initial jobless claims, CPI. And then also Social Security Administration, the annual cost of living adjustment. Very, very interesting that they're doing that all at the same time. So more importantly is going to be the consumer price index. Now, as many of you have stated, I love the comments, but you're stating that how deceptive the government can be in terms of how they report this. They're going to tell you what the consumer, and that's all of us folks, we're the ones that we go put the gas in the car. We're the ones that go to the grocery store and buy the food. We're the ones that buy the clothes. We buy the household products. We do everything to keep our lives going. We are the consumer. So now they're going to tell us what the price index is, what's happening. Prices going up, prices going down. But guess what? They take out food and energy and then tell us, so it really, inflation's under control. Maybe it is, maybe it isn't. But you know what I'm saying? So it always kind of, you got to take it with a grain of salt. They did not like the producer price. They decided to brush it aside, but they declined on that. And they come down nice. They did come down pretty hard. They rallied it back up, but then they brought it back down. So here we are. Are we going to get up overnight closer up into here? So CPI comes out, initial jobless claims come out, and we're like, wow, Okay, not good. And then they start to tear it down before we open tomorrow. I don't know. But at some point, I am going to be looking for the completion of this minor wave 2. Again, I will restate right now. The minor wave 2 is my preferred count. Let me restate what the alternate count is. The alternate count is if the market breaks above 45.98. Let me take it out to the 4-hour chart. If it breaks above 45.98, it's going to leave 3 waves down to that 42.35 low. Actually, it's a little bit lower. Where is that low? This one. Actually, 42.39. I have it at 35 for some reason, but we'll say in that area. It leaves 3 waves down, and that's from the high of primary wave B. Couple of ways to view that. Either it's going to be that the primary C, the intermediate C and the primary B are not complete. So we moved a 3 up, put the 4 over here, and we've got a 5-wave rally going. Now, that fits more in the SPX than it does in the futures market, but one and the same, supposedly, right? So that would suggest we're in a much larger 5 waves up. Now, I got to tell you, that one doesn't carry a lot of weight with me because see how it's starting? Look at this chip chop. Was this 1, 2, 3, 4, or 1, 2, 3, 4, 5, 3, 1, 2, 3, 4, and we got a 5? And then what is that all going to be? So I think this is working to be an ABC. So as far as like working on 5 waves, it kind of kicks it out of the pod, so to speak. So, but one more. The primary B is not done. We do have the ABC in place, and we have another ABC, and we put an X underneath it, which just suggests that the market is going to take a lot longer to put this high of primary B in as we go through what it would be commonly known as a double ABC. So that's ABC, X, ABC. Whether it goes above that high at 40 almost 4,700, 4687, 4690, whether it goes above that high or not is not as important as the forming of an additional 3 waves. So now, and that being the case, I can come back down here and say, well, okay, and this is wave A. ABC to form wave A. We get a B wave and then we get a C wave, and we end up no further than where we started in terms of up here. Yet to be seen. But I want to just reinforce this. Like it isn't necessary to assume a bullish or a bearish posture. We can trade without it. That's in fact how most of this trading algorithmically it goes. It's not like they're going like, oh, gee, I'm going to plug in all my bullish stuff. And it really falls down to premium. Volatility and premium. That's the game. So when we're looking at the options, which have a lot of control over the underlying, of course, and these indexes, when we continue to see that the underlying is really getting pushed, a lot of it is coming via the options. And if you're a trader in the options and you happen to be the one making the market, and you're providing the market, and it's nothing but buying calls. You're selling those calls and you're buying the stock. So you're selling underlying volatility, but you're buying the stock to hedge it. So again, you're selling the volatility, buying the underlying. Selling the volatility, buying the index. Couple of things, couple of ways to do this. So we have the dispersion trade. We have just the straight options trading. So lots of different things that propel the market in one direction without it really being said it's bullish. But the only thing I believe that we're set up to accept is either you're bullish or you're bearish. If it goes up, you're bullish. If it goes down, you're bearish. You don't need to be either to trade successfully. Okay, moving on. Well, so again, here we are in the ES. We can continue to have upside potential. Actually, very strong upside potential. Because from here, we're looking like we might be closing out somewhere around 44.17, 44.18. We can run up to 50. So that's another 32 points. That's a pretty decent rally. But that zone is 44.50 to 44.59. And then if we bump even higher, then we're running into 44.88 to 44.95. 44.95 is actually where minuet wave 5 is equal to minuet wave 1. Excuse me. So equality is up here. One bump further, 1.618 is 45.68. Now remember what I've said about waves 2. They have the capability of retracing almost all of wave 1, but what they cannot do is exceed the starting point of wave 1. If that should happen, then it's not a wave 2. And that's just logic, right? If wave 2 corrects wave 1, it can't overcorrect it. Now, what it can do, wave 2 can go and create an additional, in this case, low below wave 1 and still turn and put in a C wave. That would be an irregular B wave. That would be an irregular structure. That's not the case here. We've got it in plenty of other cases, but not right now. So what it cannot do, it can't, as a wave 2, it can't exceed the starting point of wave 1. Should that occur, then it's not correcting wave 1. So this whole structure becomes something else. Hence, the alternate count. More on that if it should happen. But it's out there, folks. I do continue to follow it and to track it. We're not threatening yet, but who knows what tomorrow's going to bring, right? We had some really great moves in this index today, where it started it got up to like 44.10 early on, dropped then to 43.77, and then rallied back to finish at 44.17, 18. It's pretty wild to watch. And it's even more enjoyable to trade. So that's how I'm going to leave that. Looking out towards the moving averages, I use the dailies because they're the more important in terms of our picture. What did we do today? We broke back above the 20, and we got a boost. Talked about it, and we got it, and we got a boost when it did it, and that 20 was at 43.85. So it broke down below it, and when it came back above it, we got a little bit, a very small little slide further, but it was on that break back above. They were like, okay, we're with you, boom, 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 and off she went. Okay, so next up, if it breaks, and what we have is the 50 period simple moving average. That comes in at 44.65. So that's just above a zone. And then we also have the 100 period simple moving average at 44.72.50. And that is still kind of going flat, but basically on an upward trajectory. So a break there could give us that extra boost up into here, or possibly even up into here. Now, again, what do we got? CPI tomorrow, Friday expiration. Oh, a lot of options will be coming off. Oh, and the spiders, and the Qs, and a lot of these components. NVIDIA on fire. They want 470. That's my guess for right now. Apple, now suddenly back above 180 after it was struggling to keep itself around 176. Now it's back at 180 while the pressure's on. Boom. Gotta go. We're going to take it back up. Is it going to hold? Who knows? But the options come into play, both the calls and the puts. Adjustments need to be made. Again, if you're short the 180, if you're short the 177.5 an apple, and we just go flying up through those, you need to make adjustments to your position. And if you're short the call, you're getting shorter. Unless you've hedged it 1-for-1. So, and it could be moving it up to monetize these options. So a lot of stuff goes on behind the scenes we don't really become aware of because we're focused on what's either happening in the stock or what's happening in the index. So those are our moving averages, and we have the 100 and the 50 simple moving averages coming into play possibly tomorrow. All right, let's go over and take a look at the NASDAQ. NASDAQ's been pretty wild. First thing I do, I'm just going to go take a look. Let's take a look at those moving averages. I got a lot of stuff sitting on this chart. I'm leaving it for a reason, but you know what? I'm going to take this guy off. Get a little bit too much. I don't like that. And 618 has been, it's still there. So I'm going to leave that up. But I need to clean up some of this. So moving averages, we have, get right in here. There we go. We broke the 50 and we broke the 100. And you see where it happened? 15,000. Let me go this way. Get out of my way. 15,288, 15,298. So just before we started to break back above 15,300. So we bopped up and down. But when we finally broke above, again, it lit the market on fire. Take a look at, let's go back down to the hourly chart. We'll just start right again from there, okay? We had 380, so we're right into here. Look what happened. Bing, bing, bang. Went, and went. I believe, what did I say? It was 52.80? Let me go check that out again. I think it was. Yeah, 298, so 15,300. Go back down to that hour, 15,300. Right in there. And also at the time, it was the hourly 20. So we broke, and it just lit. You can see it. We had this huge climb from 15,300 to 15,390, 383, 390. And then that final boost at the bell, after the bell, actually. So it's still looking good. But here again, same deal. I've moved everything over because as soon as it went up there, time to move the 3 over. The 4 came in here. A little bit different. Because this would have been the 4. So this is, this is 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3. Bing, put that in. ABC 4. We got the cleaner ABC 4 squeezed in to this morning. Okay, so we got that done. Then, after coming right off that low, and they sold it all the way down. This was on the Fed revelations, right? But then we got the balance of the Fed minutes, and this was anticipating. This was the actual reading of, and it was like, okay, boom, go back, and it was on that return and back above the daily 50 and the daily 100. Boom. They all kind of came in to push, and push they did. So what do we have now? Connecting for wave 5 compared to wave 1, which also was pretty solid. It was a pretty solid rally. What do we got? First up is equality. That's 15,620. It's another 210 points from where we are. Now, between 2 days, we got an expiration coming up on Friday. Are they going to try Apple at 185? Are they going to try to get NVIDIA back up to 475, 480? Are they going to move Microsoft to 335 to 340? Meta 330, 335, 340? See what I'm saying? They just keep pushing. They just keep going. And that, we got the Magnificent Seven. They start pushing on these things and it goes. I saw it this morning. I got to tell you, I saw it this morning on NVIDIA. They were going to buy NVIDIA no matter what. They kept it down about, between being up 5 to 6 to 7, but then towards that last move, bam, just scooping by. And when you see them come in and do that, understand as well that the volumes were not gangbusters today in the futures. There are plenty, of course, but when they came in to go grab a big chunk of stock, underlying, whether it be Apple, whether it be NVIDIA, whether it be Meta or Microsoft, suddenly you saw these surges in the indexes. So here's what we got. We're above 618, and that's for the wave C. So I took off that last 786. Let me just throw it back on there. Let me put it back up so that you can see it, because it sort of does come into play, and I'll leave it up now. 15,578, 15,580, we'll call it. So we got that. Then we have equality. Now, it doesn't necessarily have to go to equality. That's just the most common. More important will be structure. And right now, it's just like straight up. So even if I bring this thing down, let's look at the 15-minute chart. What does that show us? 1, 2, 3. 1, 2, 3, 4. So we got one more. Maybe. Take it down to the 30. What does this show us? Pretty much the same. 1, 2, 3, or 1, 2. We got a little bit more for 3, little 4 and a 5. So if we get the 5 and in the 5th, and that's as high as we get, it's not the most common. It's actually the 3rd most common, but it's going to be structure that's going to become more important than the fib. So first would be here, second is actually here, third is here. And it doesn't mean that we, this will be hit first no matter what. So again, we'll be looking at the structure if and when it should get up to here. So that's first. Then we have 786, that's for the second wave. So that works. And then we have equality for the minuet 5th at 15,620. So we have a cluster. And I'm thinking that that's where it should kind of figure itself out and come to a conclusion. Same deal on a alternate view. If we break above 15,858, we're going to be left with 3 down, because this cannot be a 2. And we're definitely staring in the face the exact same situation. But I'm more inclined to say that C wave stays in place, and it's the B wave that'll get moved, and it's a double ABC, which is nothing more than the market is taking more additional time. And we can say, well, it's earnings. Well, we could say, well, we got to see what the Fed really wants to do. Well, we got this. Well, we got that. Well, while we're waiting, it burns up more time than necessarily price, even though these are pretty strong moves. But in terms of a daily, it's burning up more time than anything else rather than price. Right? 14,578. We got 15,000, 16,250. Yeah, nice moves. But in terms of what the capability of the market to do, even if we're just doing a double ABC, and this is A, then we get a B, and then we get a C, and we still don't end up above here. Maybe by a little bit, maybe not. It's going to get interesting. So here we are hanging out at the top. What are we supposed to be doing up here? Well, we don't have enough information to let the market drop. I think we do, But I'll tell you also that it's like, to me, if we start getting up there, that really what's going to happen, it's going to be a shockaroo. Now, why anything that's sitting out there waiting that still can happen would come as a shock, I don't know. But it'll be something that surprises or shocks the market into direction. So, and we know that there's plenty of that out there. And I hate to say where it comes in. So I'm not going to address that. But I will say that we have counts that definitively and exclusively include large drops in the market. All right, I'm going to complete it right there. And again, tomorrow I'm looking for additional upside. But let's see what it does overnight. We get up into these levels, and and then CPI comes out, and they definitively say, don't like it. Boom. And we go, and the bonds go with. The bonds don't recover. The 30-year bonds, see, don't forget, if we look at the Treasury market, they're also trying to get that inverted curve to be less inverted. So they're trying to pull that back in. And I think it's almost concerning because you see that if they drop the 30-year bond, which they did today, now look what they're doing. They're taking it above. They're almost back at 114. So we're up at a level that it really pulls that yield down. And then if I go down and I'm taking a look at like the 5, it's not up as much. The 2, not up as much. So we're pulling that yield curve back in versus it expanding and being more inverted. All right. A lot of stuff going on. A lot of stuff. But I'm going to leave it all right there. Have a great trading day tomorrow. Keep risk in mind at all times, folks. Next update will be on Thursday, October the 12th.